وإذ بوأنا لإبراهيم مكان البيت ألا تشرك بي شيئا.
Welcome. It's me, your coach, your mentor, Coach Abduly. Let's proceed with backtesting sessions or backtesting program. And today I see a very interesting pair. I see a very interesting pair to make some backtesting. That is US30. Let's see how the market just let's see how the market reacted and the price reactions that this market is giving us right now. Remember, the strategy is advance the pure price actions. Advance the pure price actions. Here, you can see that the market gave us a severe break of market structure from this part here, up to this part. The market is just giving us more than one break of market structure. For the people who don't know the concept or who don't know the strategy for pure advanced pure price action, they could assume that the market is just to perform the shift right here because you have this break of market structure, and here the market just to break these invalidation points. But for us or for the people who are just knowing the strategy of advanced the pure price actions, they will come here to mark this level of breakout, and they will go to 3 months time frame, and nothing they see here. So we know that this is not a break of market structure. This is just an outside formation, and it's just a normal liquidity or a normal formations. Let's mark this one here down, and then let's verify this if it is a real break of market structure or not. When you go to 3 months, you can see that that level for breakout is just positioned at this highest price of 3 months time frame. So this one here is a valid break of market structure. So from this scenario, we all know that this is a structure or this is a trend, and here above is not a structure, just it is an outside formation, because in any structure, sometimes the markets can give you inside formation and then it will break, and sometimes the market will give you this is the structure, and will break a structure and offering you an outside formation. That scenario is what the market just performed right here. It gives you a structure, and at the same time the market is giving you an outside formation. So here now, as we know that already the market just came in this liquidity area. The market already came in this liquidity area. Also here we have this structure. We have this structure, or we can call it a formation that opposed the bullish movement. But before came this the structure, let's do as how we did here in left side to verify if this is a real structure or it's just a normal liquidity area. Let's mark this level for breakout, and let's go to 30 at this time frame. You can see it is not a structure, just it is a normal liquidity area. Doesn't mean that when the market entered here can't react and fall down. No, it can come here and give you a reaction, then it will drop down, maybe. But now let's deal with the current price action that the market is giving us. From that scenario, here we will consider, or we will need this market to come and to liquidate that high right there. Let's see the price action that the market is giving us from this low here, from this point here down, and how the markets will give us a trend that will help us to reach this point here. After monthly time frame, directly we're going to the daily time frame. When you go to the daily time frame here, we can see that the market is just was dropping down like this way. Market was dropping down like this way, getting low, high. This was the last low. In the market, they gave us this liquidity area or structure or formations. Then they gave us another formation here. It gave us another formation. Then it looks like it shifted here. But why the market is continuing going up and then it came back shifted? We will go to see the reasons why the market performed something like that. when the market just performed it, something like that. Let's start to see if this break of market structure is valid or not, or not valid. Let's mark this level for breakouts right here. As long as this is the day time frame, we'll go to verify this breakouts in a weekly time frame. When you go there, you can see that is a valid break of market structure. So any violation of this invalidation points, it will mark it as a market shift. And here you can see that the market just performed the shift right here. It performed the shift right here, and after this shift, the market just gave us this inside formation. Yeah, it is an inside formation right here. So this is validation points, and here down is just invalidation points. Why we didn't mark this? Because if we mark this area as a break of market structure, and when you go to weekly time frame just to verify it, you can see there is no any structure right there. But if you come here and if you mark that level, you can see that it was a structure. That's why the market, after break this, it's entitled to take the liquidity right there, and then going further up. After going further up there, you can see the market performed here another break of market structure. So, and when you go to weekly time frame to verify it, you can see this is just a valid break of market structure. But here down, you can see that the market just gave us expiration 5, means this structure, there is some probability of the market to come and to violate this structure, to come here down to take more liquidities due to some scenario that I taught my students there. So the markets can enter here and they give you a shift, they're going up, or the market also have the husband rate of coming here down to reclaim these points or to violate this invalidation point here, and to come here down just to take the better liquidity here down. We will wait to see how the market just will react. But currently now, let's deal with this structure of this current structure. Let the market just gave us, you can see this is the level of breakout, and here the market gave us this inside formation, as you can see here down. But for this case, or for these price sections, I think that if the markets want to come here down to take a liquidity here near the near the reclaim point here, the markets can come here in this area to take those liquidity, because this is a level of breakout. This here down is the validation point, and here is an invalidation point. And the way the market formed this invalidation point, it's highlighting us that the market maybe can come here down to take a liquidity here and going up, or can even violate this level to come here further down to take a better liquidities there down. So let's see how the market will just react. I want to give you a move that's the market. I want to give you how the market gets changed the move and they come here down. Let me cut this chart right here. There we see the market just break the structure. Here on the left side, we see this liquidity. The market comes to check the liquidity here. This acted as a turning point of the markets. So we need to find a shift in the H1's time frame. When you go there in H1's time frame, let's find how shift just was formed. You can see the market gave us a multiple breakout. The first breakout was this one, then market gave us another breakout right here. This is the last breakout. You can see this is the last. Let me clear this line. This is another, last breakout that the market gave us. On the scenario for defining safety, I think all of my students are just knowledge. First of all, you have to find the point of a breakout. After getting the point of a body breakout, you have to find the true invalidation points. And here we see the multiple breakouts. Then the market gave us an engulfed structures here. And you can see the structure that was not yet engulfed, the structure that was not engulfed is this one here. So it's low here. We'll use this as a what? As an invalidation point. So this point is where we need to wait a shifting of this price in 1 hour time frame. Let's wait and see how the market just reacted and how the shift just happened. Let me reduce the speed up to there. Then we can see the market came here and they gave us a shifty right here. Markets came here and just gave us a shifty right there. After giving us that shifty, actually the market gave us this inside formations right here. The market gave us these inside formations right here. Let me create this line here and then draw this arrow. Let me do this arrow right here. This shows the rate of market structure. So a lot of people just know that the market has to come in this area to take a liquidity here in this inside formation, because it is just the formation that caused the market to change the bias, to change the direction in 1 hour time frame. Then the market have dropped down. But for those who studied the concept of explorations, it's just exploration 5 the market gave us. Here above this shifty, we can see the market gave us this liquidity here above, and also the market gave us this imbalance right here. Markets gave us this imbalance right here. So the markets here can come to this 50% of imbalance, or can come to this order block, or it even can come here to this liquidity area, and then it can drop more down. I mean, the markets just can violate. Can violate this invalidation point of the structure, and can drop more down. Anything can happen. So to know which points, which exact points where the market will come to take the liquidity or take the order, if it is in this 50% right here, or in this order block right here. Let's go to lower time frame, to subordinate time frame, to see if there is any price actions are happened, or if there is any structure happened in 50%. If there is any price action happened here, then we will use that actions or reactions, or we will use formations, subformations that happened in 50% there. If there is no any subformations or any reactions happened, then we'll go there to another block. Let's go to 50 minutes time frame to see if there is anything happening right there. In 50 minutes there, we don't see any structure here, but you see the market gave us this reaction in 50% there. The market gave us this reactions. It is just it might be, it can be entry PMR, previous market reactions. We can use it. So why the market rejected here? Why the market rejected it right there? You can see here the market gave us this order block right here, but unfortunately the markets break that order block. Means this is a breaker. This is a what? Let me mark it. This is a breaker. The market gave us broken order block. So the market will come to 50%, because within 50% you see this structure happened here, and it is just the entry PMR, previous market reaction. Then where we'll put our stop loss, we put our stop loss on the candle that came to invalidate this order block, or to break this order block. Here we see the candle that validates or break this order block, or this one right here. So and entry, we'll use the entry at these parts here, at this border there. So that is how we can enter in this area. That is where we can take or trade there. Remember, this is a reversal trade or liquidation trade. Where are we supposed to go? As long as this is a daily 50, first of all, we need to see FTA's time frame, how it is trading. As you can see, FTA's time frames already performed the shifty also right here. So we needed to go now directly in the daily area for liquidity. In the daily area for liquidity. Here we can see that the markets has to come here down in this area. In this invalidations area, let's find any subformations in this area right there. In H1's time frame, we don't see any subformation. In 30 minutes time frame, also we can see this one. The market gave us this formation right here. That was not yet consumed. Yeah, you can come and then mark that area. So maybe we need to see the market is coming there. Maybe see the market is coming there. So that is my anticipations. But if the markets will reach an liquidity area and they give me a reactions to go up, then I will cancel the order and I will join the market. But currently, my idea in the US30 is look like this one. I will enter according to entry PMR. Yeah. So right there, let me enter there, and I will come to whiskey somewhere there. Then my target could be here down to this label right there. Let's see how the markets just did. Let's see how the markets did. Wow, the market just reacted there, and then now it keeps dropping down. It kept dropping down, as you can see. Okay, the now market just broke this structure. It's might come here to take a liquidity either here or can come here up and down to fill these imbalances and then keep dropping down. All in all, that is my idea in US30. I wish you all the best, guys.